everyone. Thank you once again for joining us here at Seafried and Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to look at the jobs report that came out last Friday, as well as some of the real estate market information that has been coming out over the past couple of weeks. So we'll start off looking at this job report, heavily impacted by the hurricanes Irma and Harvey. And as you can see down here, the number of jobs lost this month was 33,000 jobs. So we lost 33,000 jobs. Not too surprising. As we look into the overall numbers in here, we dig down, we can see we lost about 111,000 jobs from leisure and hospitality. Not surprising considering where the hurricanes hit, so that detracted a lot. However, when we look at the overall health care and social assistance numbers, that continues to increase, up 13.1 thousand jobs in here. And then we look at the transportation and warehousing, up 21.8 thousand jobs. So that's how we knocked into that 33,000 jobs lost in here, primarily due to that leisure and hospitality. We should see a return, however, of those jobs as the month progresses here. When we look at the overall unemployment rate, we can see it actually declined to that 4.2%, down 0.2%. Very strong. That's a good number. The difference between the unemployment rate and the non-farm jobs or payrolls is basically the unemployment number counts if you have a job, even if you're not being paid currently. That is where this number is declining, whereas in the non-farm payrolls, you have to be paid in order to be counted in that number. And I think there's over 1 million individuals that had a position, had a job, however, were not paid during the month. So that's what we have for those numbers there. That's the difference. That's why we see a negative number on the non-farm payrolls compared to the positive impact, downward trend in the unemployment rate. We have the participation rate down improving to 63.1 from 62.9. So we saw that improvement in the overall participation rate. We're looking at the official unemployment rate, like I said, 4.2. We had an even stronger decline on the U6 at 8.3, down from 8.6. So that's a big positive trend in there. This margin between the two, the U6 and the U3, is continuing to narrow, and that's what we like to see. Looking at the home situation within real estate, you can see the number of new home sales kind of declined over the past quarter. Steadily had this one pickup at the end of June, and then we start coming down. Overall, 560,000 houses sold. That is down 3.4% month over month, but up 1.2% year over year. The median price at that right around that 300,000, up just 0.4% year over year. So we don't have a big price appreciation in the new home sales. And the number for sale is 288,000, gives you a supply of 6.4 months. So there's not a tight supply in the new home sales. Now, although we saw the new home sales start to come down, the building permits did increase over the quarter. Had a little bit of volatility, but we did see a pickup. So that is a positive trend, and that should project into the future that we're going to have a number of new home sales increasing in here. So that's a kind of a positive tail end of the fourth quarter here. When we look at the existing home sales, you can see we had about 5.3 million houses sold month over month. That's down 1.7%, but up 0.2% year over year. When we look at the The supply, we have 4.2 months of supply, pretty tight in the inventory, and therefore we're starting to see that price appreciation. Year over year, median prices for existing homes up 5.6% to that $253,000 mark. Overall, we saw for the quarter this start to come down. We've seen these numbers, these declines reflected in the second quarter GDP number, where we saw the non-resident or residential fixed investment decline a little bit. We might see that decline again in the third quarter, but hopefully in the fourth quarter we'll start to reverse that trend. So that's what we have for you this week. We look forward to talking to you next week. Have a great week, everyone.